Hey, what's up guys? Houston here. Someone asked the question, can I get a loan with charge-offs and with collections? Well, here's the thing about it. The reality of it, yes, you can. Now, the bad part about it, many times you're probably going to end up with loans with very high interest rate if you're not belonging to like a credit union. Okay, so I'm gonna explain that to you. Well, going back to, let's break down the charge-offs. All right, so if you have a charge-off and it doesn't have a balance on it, it's much easier for you to get a charge-off that's still reporting a balance. As a matter of fact, if it's still reporting a balance on a charge-off, it's illegal and you can challenge that. Okay, you definitely can challenge that. Then let's look at the collections. Okay, like with certain lenders and stuff, they will work with you if you have collections. However, usually they want to see collections that haven't reported within the last 6 months or longer. Okay, if you and it is possible, if you look on your credit file, if you have a collection, if they hadn't reported in the past 6 months, even though it's a collection, then they will accept that. All right, now there's several places you can actually go to actually get a loan. All right, so like I stated to you, you have your credit unions, you have your community development financial institutes, and you have your tribal lenders. All right, now unfortunately with your tribal lenders, those are probably going to be the one you have the most success with. All right, and the reason is because they don't have to jump through all of the red tape a lot of these lenders have to go through. Now, that's the reason they're able to give you high interest rates loans. All right, now here's the thing about it that you definitely going to have in order to qualify for these type of loans. One, you have to have an active checking account. Number two, you have to have deposits going into that active checking account. With some of these lenders I'm gonna mention, they want to see like deposits maybe 3 to 4 times a month. Some of these lenders, you only have to make a deposit once a month, but you have to have an active checking account. Okay, now in terms of income, so you can be self-employed, that's fine. All right, but again, you have to show proof that you have deposits going in on this on your checking account. Okay, so that though you can't get around that, you have to show proof of income. Someone asked me the question, well, can I get a loan with no income? Well, the thing about it, what do you mean by no income? If you mean you completely have no income, then ask yourself, how am I going to pay it back? Would you want to give somebody a loan if they don't have the means to pay it back? That's the thing about it. So if they know that you have income, it's much easier. Now, I would tell you the minimum income requirements to get approved for some of these loans, you usually want to have anywhere from $500 up to $1,000 after tax. Okay, now one of the easiest loans you can get if you're working a job, I always tell you that's no interest on the loan, that will be with your regular job, filing your W-4 tax exempt for 3 to 4 months. That way they'll stop taking federal income taxes out of your check and you'll have more money to bring home to actually pay your bills. That being said, some of these here places, so you have First Cash Advance. All right, they offer loans up to $5,000. all right, then you have places like Checking to Cash. They're forgiving when it comes to like charge-off and collections sometimes as well. Then there's Albert. Albert is the loan app and stuff you download and everything. They go up to $5,000 now. So there are places that would actually give you loans. Now, in terms of like I said, with tribal lenders, you're looking at the best ones to go after with tribal lenders would be like big picture loans. Okay, now the interest rates is going to be high, but they're more forgiving when you have collections and charge off. Now they're not in all 50 states. However, they give loans up to $3,500. Then you have Explore Credit. They give loans up to $2,000. All right. Again, the interest rates is definitely much higher. However, they do offer loans, and it makes it much easier for you to qualify. Then you have platforms. So you have platforms like Heart Payday loans. So with Heart Payday loans, their loans go up to $5,000. The best part about them is that their interest rates is only 5.99 up to 35.99. All right. Then you have Viva Payday loans. So with Viva Payday loans, it's similar to Heart Payday loans, is that the interest rate is 5.99 up to 35.99. All right. Now let's talk about some of these credit unions. Here's the thing about it. When you're talking about getting a loan from a credit union, when you have bad credit, you don't want them to do, you have to make sure that you have been a member. And so some examples of these credit unions is Department of Commerce Federal Credit Union. Okay. So the interesting thing about them, if you are a member for 6 months, okay, with at least one deposit, they'll give you a $5,000 emergency loan with no hard pull on the credit. All right. Then they offer a payday type of loan as well. And so with their payday type of loan, that's the type of loan you have to be a member for at least 90 days. Okay. With at least one deposit, one 30-day deposit. And they'll give you $2,000 for that. All right. Then you have like DCU, Digital Credit Union. They give up to $2,000. They give you $1,000 for the first month, for the first 90 days, and then if you've been with them 6 months, they'll give you up to $2,000. All right. So you also have a credit union. Now this credit union is called DCCU. Okay. And so it's called DCCU. And the thing about it, like if you're rebuilding your credit and you need a loan and stuff like that, they'll give you an unsecured credit card up to $2,500. Okay. So those are like some of your credit unions, just giving you a few examples that your credit unions usually some want you to be 30 days, some want you to be 90 days, and some want you to be 6 months. It just depends on the credit union. Just like with certified credit union, they'll give you a $2,000 loan, and all you have to be is with them for like 30 days. So it just depends. All right. And then you have your CDFIs, your Community Development Financial Institutes, right? So with your Community Development Financial Institutes, these are the ones, they're always working with the community because they know that a lot of people in poor communities, they may have more of a challenge getting approved for credit and stuff like that. And so their minimum income threshold is lower, usually about $500. And one of those CDFIs that you hear me mention is like Opportune. Okay, so with Opportune, they'll give you up to $10,000. All right. And then you have Economic Justice Fund.org. All right, they're out of California. However, they give up to $10,000 as well. Now, the thing about it, if you call the Economic Justice Fund.org, if you go to their website and reach out to them, then what they will do, they will tell you the closest CDFI to you that you may be able to get a loan when you have bad credit as well. All right. Now, you have some other alternatives to get a loan when you have bad credit and charge-offs as well. So, for instance, like if you're working a job, if you have a 401k, all right, your 401k plan, you can borrow from that to pay bills and stuff like that. And that type of loan, you do not have to do a credit check, okay, because it's from your 401k. So different jobs you would have to check. Then you may have a portfolio. You may have a portfolio for as like with the stock markets and stuff, like with Robinhood example. Like if you have so much invested into the stock market and stuff, what they will do, they will give you a margin loan on your stock portfolio. And so this is how the rich actually stay rich. And so they'll rather pay interest on that margin loan than go to the bank and borrow the money at a higher interest rate. This is how they play the game. So they'll say that they have say that they have $100,000 in the stock market. Okay, so their margin account may offer them maybe 50, 75,000, right? And if they have a lower interest rate, instead of them going to the bank, and if they have bad credit, they can borrow that money from them to do whatever they need to do, pay bills and stuff like that, while leaving their money in the markets. Okay, so that's one way that the rich actually do keep a lot of their money, because they would rather take a loan on the margins of their money than versus going out to get a loan. And so their credit may be bad, but because they got money in the markets, that's where they have the leverage. All right. So I hope this video helped you. If you have any question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description. Schedule a one-on-one consultation. Thank you.